ME School of Finance, Accounting, and Business, presents Certificate in Islamic, Green and Sustainable Finance. Module 5. Islamic Finance Contractual Modes. Intended learning objectives. The learner should be able to recognize the different T modes of Islamic Sharia-compliant, contractual structural arrangements, commonly used in the Islamic finance niche. Key structures used in green Islamic financing. An assortment of structures for Sharia-compliant financing and investing activities exist, however, the emphasis will be in types of Islamic finance, deemed most appropriate for Islamic impact investing, and widely used currently in Islamic financing and investment sphere, namely Sukuk, financial certificate; Musharaka/Mudharaba, partnership; Murabaha, cost plus financing; Istisna, build/manufacture/construct financing; Ijara, lease. Why exclude Qadin Hasana? It should be noteworthy, Qadi Hasana will not be considered, since it is mostly a compassionate loan, and hence, considered as a form of aid, not an investment. Although, it has been observed, in practice, that some microfinance institutions are building business models around the Qadi Hasana concept, on rotating group savings, with group members guaranteeing each other, with administrative fees charged to cover costs, but it is yet to be determined whether or not these transactions are transferable geographically, profitable, scalable, and sustainable in the long run. These are mostly based on the model pioneered in Bangladesh by Grameen Bank. Despite these schemes having potential as a valuable tool for financial inclusion, these are usually set up as saving and credit societies or credit unions.
Sukuk, financial certificate. Sukuk is a document of title, security, related to specific assets or asset classes, underpinning it. Sukuk are not without dispute, as some scholars and individual feel that the time value of money, and the making of money above the sum, initially advanced, from it, is inbuilt, in the long-term nature of a market-tradable sukuk. In a sukuk transaction, the borrower sells the certificates of ownership of the assets, or group of assets, similar to a collateralized debt obligation, CBO, to a group of investors. The investor then rents the asset back to the borrower, and earns rental income, or profit based on a predetermined rental charge, or profit share rate. The borrower undertakes a commitment to buy back the asset underpinning the certificate of the contractual instrument on a specified date at face value. If listed on a securities exchange, the value in the intermittent period fluctuates based on market conditions, hence the possibility of earning a profit on the sale of the security. Sukuk can have a variety of underlying assets, defined as a right to receive future streams of income, or usage benefits, from which income streams can be derived. In effect, ownership of a sukuk is partial ownership in debt, murabaha, asset, ijara, project, istasna, business, musharaka, or investment, mudharaba, contractual structures. If the underlying assets transferred and contracts are diligently prepared, in accordance with the rules governing them by the lawyers, and approved by a credible Sharia board, the concerns of the paragraph above will have been addressed. The debut sovereign nation to sell and promote a sukuk was the Kingdom of Bahrain, in the year 2001, which opened the gates for sovereign nations. Selling sukuk. As of July 2014, sukuk amounts outstanding were approximately $296 billion, with sovereign nation sellers accounting for 36% of the total market. This year the biggest sellers were corporates and the Malaysian sovereign and sub-sovereign sukuk sellers. In June of 2014, the United Kingdom became the first Western country to sell a sovereign sukuk. This was significantly oversubscribed, receiving buy orders of £2.3 billion having been placed on the issuance of £200 million, $322 million. Between the years 2002 to 2012, annual sukuk sold grew at an average rate of 35%, from $4 billion to $83 billion. Although the majority of sukuk are intended for home country financial markets, and issued in local currency, international euro-dollar sukuk sold is growing from 10% in 2010 to 20% in 2014 of the sovereign sukuk market. There is a need and potential for a forestry-based green sukuk, would in purchasing large parcels of land say in Africa and or the Australian interior, which would be planted with native trees and managed as a sustainable rainforest. This rainforest would be a catchment area for rainfall and also reduce CO2 emissions. It would earn revenue through the sale of carbon credits and also the timber, grown as a managed agri-forest. Musharaka and Mudharaba. Musharaka and Mudharaba's contracts, being equity-based contractual arrangements, include profit and loss sharing, and risk-sharing mechanisms, hence have no controversy among Sharia scholars. Musharaka is a joint-owned asset arrangement, like diminishing musharaka for home financing, or venture formed for the purpose of equity participation. The participants provide capital, in accordance with pre-agreed ratio, and share the profits, in accordance with a pre-agreed ratio, however losses are shared, according to the capital contribution ratio. Mudharaba is a partnership in which several non-active investor partners, Arbab al-Mal, gives money to the investment, or venture managing partner, Mudrib, for the financing of a commercial venture, or investment portfolio. The managing partner, Mudrib, received a percentage of profits for his efforts to manage the venture, but not share in the loss, and is not entitled to any other compensation.
If the Mudaraba agreement allows the Mudrib, it can also contribute to the capital of the venture, for which he will be treated like any other investor partner. However, he will still be compensated with a separate profit share, for his management efforts. Profits are shared in accordance with the pre-agreed ratio between the Mudrib and Arbab al-Mal, whereas financial losses are borne entirely by the investor partners. The Arbab al-Mals will share their profit allocation in accordance with their pre-agreed ratio and losses in accordance with capital contribution ratio. This is very similar to the practices of traditional venture capital funds. Hence potential products to be developed could by projects in farming food crops, fishing and rearing of livestock, storing them ensuring minimal damage and wastage, and agricultural processing and distribution of the same based on community-based youth groups organized as Musharaka or Mudharaba. Murabaha, also known as cost-plus financing. Murabaha is the current favorite Islamic Sharia-compliant contract used by Islamic financial institutions. It is a trade-based structure usually used for short-term financing needs, mainly to inventory needed as working capital, set up as a sale contract, where the inventory is bought by the Islamic financial institution and sold with a markup to the client, and payable in installments. It is also used by the sovereign nations to issue treasury sukuk for short-term borrowing. The underlying item is owned by the Islamic financial institution until the buyer completes the payments. Istisna, make or build financing. Istisna is a contract to construct, make, or build a specialized item, or asset for an end purchaser. Mainly used as project finance, to finance long-term, large-scale facilities, like manufacturing plants, housing projects, solar power plants, airports, bridges, roads, and natural resource mining operations. It is a tripartite agreement between financier, end purchaser, and builder, manufacturer or contractor. The contractor gets a contract to build an asset from the end user. They then approach an Islamic financial institution, who finances the build stage, Once built, they sell it to the Islamic financial institution, who then sells it to the end user. The end user can further have it refinanced for the long term using the sukuk contract structure or other longer term deferred payment mode of finance. Ijara, lease. An ijara is a lease contract, mainly used for financing of motor vehicles, equipment financing, plant and machinery, or home finance, with a fixed period of time, with the regular, periodic flow of payments. Legal ownership of the asset remains with the financier until the payment schedule of the contract has been fulfilled. Lease payments are agreed to be in advance over a specific time period. A sukuk ijara is ideal for long-term financing of projects, like wind farms, solar projects, hospital complexes, school complexes, where the project is built on behalf of the operator, using istisna, is bought from the proceeds of the sukuk issue, and asset leased, back to the operator who makes the periodic payments generated by the usage of the product or service, for example, sale of electricity, rental of the healthcare facility, rental of school facility, etc.